Welcome to the circle. Before we go forward, let us rewind what we had predicted for the week gone by and what actually happened. Okay, yeah, here it is. This is our previous video. You can see that our bias was negative. This is for the week starting from 6th. Okay, bias was negative. Buy on dips doesn't work, and correction to continue. This was our prediction. And which are the levels that we predicted? So about this red trend line, that is around 22,550 to 22,600, breach of which we expected test of previous low, that is 21,964. And if it goes below and sustains, we said we will have a new low, new swing bottom. Okay. So what has actually happened? You can see this is the current chart of Nifty. This is where our discussion or video was made after this candle. And as exactly predicted, Nifty has breached this red trend line and went on to test the previous bottom, that is 21,964, and it has breached that also. Okay, and made a new low of 21,743. Right. So again, the announcement of Trump pausing the tariffs for 90 days for almost all the countries except China. The news, positive news came. Our market was closed for almost 2 trading days. It was trading and was allowed for, it was not a holiday working day for Europe and US markets, but ours was closed. So we missed that move and we opened gap up. And the very next day, next trading day, we went on to make a new high. So whatever our study analysis was absolutely came true, and all the conditions on the downside what we expected have been achieved. Okay, now let us close this previous analysis window and come to the current chart of Nifty. Okay, let me zoom in, make it bigger and convenient for you to understand what I'm trying speaking. Yeah, here it is. So this is what we were talking. The low was made, new low was made, this was breached, new low was made, and again a bounce back happened, and we just closed about 22,806 level. This is new Fibonacci level. So earlier the low was this, so we have taken this as the reference, this is the top and this is the reference. Because new low has been formed, now we take this as the top and this as the bottom. That is the reason the values of 0.5 and 0.815 and the remaining all values got changed. Okay, so 0.5 level, that is 50% level, Fibonacci level corresponds to 22,806, and where we closed just above that, and we closed around 22,828. So it means that this level has been taken out. Okay, and which is the next level we can look for? The most important is golden ratio, that is 0.618, 61.8%, that is 23,057. So almost 220 to 230 points away. So is it going to trade and it will going to take a few days to reach there? I doubt that. Why? We might open gap up, okay, because we are bouncing from the bottom. So because of the tariffs, and yesterday or day before yesterday, another news came that all the imports related to mobiles and semiconductors, laptops, they were exempted from the even 10% tariff. So that is again one more positive news. Okay. So we may expect market to bounce back, and this probably 0.618 is taken out in the gap up itself. It is very much possible. This possibility cannot be ruled out. Okay, 23,057, post which we will test the upper end of this falling channel. So far, this has been a falling market since September. If you take a bird's eye view, overall view, there are ups and downs in between. But the overall direction of the market has been downside. Okay, so we may expect market to test 23,057, that is 0.618 level, Fibonacci level, post which we may see testing of 23,414, around 400, roughly you can say 23,400. If this channel is breached and at least one candle is formed or closed above this trend line, we may expect a very good move on upside within very few days. Okay, so logically the level after 23,057 is 23,400, and after which you get the previous swing high, that is 23,869. This value, this top of this candle, 23,869. Okay, so we limit our view to 23,869 max, extreme bullish scenario. Why we are not willing to go above market? Can market not go above this level? Yes, it is very much possible. It can go. If there is a 4 or 5% move in a day or two, it can move. Nobody is denying that. But for the purpose of analysis, if one treats trading as a business, okay, so they should learn, control the risk, protect the capital, okay, and it is better to opt for some strategy. You should have a plan when to get out if your position is in bad condition, or if your view goes wrong, get out with the minimal loss. If you are right, market will reward you more than what you expect. Okay, and the coming week is a very short week, considering that Monday is a holiday on account of Ambedkar Jayanti, and Friday, it's a Good Friday. That is also holiday, for declared holiday for the stock market in India. Okay, so hardly in between 3 days are left: Tuesday, Wednesday, Thursday. Tuesday is Sensex expiry, and then Thursday is Nifty expiry. So you may expect a very fast move on a upside, provided there is no negative news till tomorrow night. Okay, so our bias for these 3 days is going to be positive. So we expect market to move on upside direction. And what are the possible levels? The immediate possible levels is 2357, post which the market would move towards 400, breach of which and sustenance above this level will call for a very good move on upside till 23,869. That also happens to be previous swing low. Okay, so the levels beyond this point we will discuss in our next video for the week after next week. Okay, that's all for now. Take care. Bye bye.